Hello, I am Renugadevi. I am working as an assistant professor in Dr. S.N.S. Radhalakshmi College of Arts and Science. I belong to Business Administration Department. Today we are going to discuss about the cost of improvement. So in the previous video we have to discuss it's related to some capital gain, what are the income received from the salary, these and all we discussed earlier. Okay. Today we have to discuss cost of improvement. So, cost of improvement is the amount of expenses incurred by a seller in making any addition or any alteration to a capital asset. Okay, so already we discussed the capital gain. Okay, under the capital gain, suppose if any individual person they are going to invest their money in either the short term or the long term capital asset. So short term capital asset is nothing but it's a person they have to hold their any asset, capital asset, the period of the less than 36 month. Okay, and while we are talking about the long term capital gain, at the time that particular asset will be holding period more than 36 month. Okay, so based on that only we have to calculate the capital gain. So under capital gain, we have to consider the cost of acquisition and cost of improvement. So while calculating the cost of improvement, at the time we have to consider the two important main rule. One is we have to make any addition to the particular asset or any alteration or expansion. For example, suppose if you are going to make any alter in a house, okay, that particular alteration or the expansion will be cost like as a cost of improvement. So the calculating the value of short term capital gain, at that time we have to take the full amount of consideration is required to be determined in the first category. Okay, next we have to from the obtained value, cost of acquisition and cost of improvement should be make the total expenditure incurred concerning the transfer of ownership has to be deducted. So this resultant value will be capital gain on the particular investment of the asset. So when we are going to calculate the cost of acquisition or cost of improvement, that both we have to kindly we are considering the index cost for calculating the long term capital gain. Okay, next we discuss about the index cost of acquisition. So what is the purpose when we are going to calculate this index cost of acquisition is nothing but we have to find the present value of the particular asset. That term will be applying the CIA, that is cost of inflation index. Actually, it is done to adjust the values by taking into account the inflation that takes place over the period. Say for example, that 3 months, 3 years, we have to based upon their particular asset we are holding the period. Okay, so in case of short term period, when we are going to calculate CIA is less than 36 months, that is a less than 3 years. While calculating a long term capital gain, at that time we have to consider the year of holding period more than 3 years, that is a more than 36 month. So based on that only we have to find the index cost of acquisition. Next, let us start the index cost of improvement. Okay, so when we are calculating this cost of improvement, we have to multiply the associated cost of improvement that was required to the CIA for the year. It's a divided by CIA of the particular year in which the improvement took place. For example, in case we are improving our asset, we have to make either addition or we have to make some improvement or addition we have to keep in a particular place and that period. At the time we have to calculate that particular year. That year of improvement is we have to take place in the calculation of index cost of improvement. Next we move to the cost of improvement. Say for example, we are taking, if we are constructing any additional story on existing house, or painting the house, or sometime we have to extend the room. Okay, say for example, already we are having a two rooms in the particular house. We are planning to increase the another one room. That also we have to, that expenses we are call it as the cost of improvement. Next, how to calculate the cost of improvement? It's nothing but the cost of improvement index is equal to cost of improvement multiple by cost inflation index of the particular year of transfer, the whole divided by cost inflation index of the year of improvement.